around for 30 years of this summer job. Thank you very much. So, for anybody out there that likes this song as much as I still like this song, it's a little fun Monday for you. Under the stars, so thank you, Lord. I just like to say it, man. Didn't say that the other night in San Jose. Heading up to San Francisco for the Labor Day weekend show. I've got my heart.
Good morning, everybody. Happy Friday. Welcome to our live stream.
Yes, it's been quite a summer. Rent a car, westbound track. And now you're off on vacation. Someday.
Good morning, everybody. We'll get started here in just a few minutes. Welcome to our live trading room. This is our live stream on Friday. And wow, some excitement this morning for sure. So we'll start talking about that, putting everything together, get ready for a good trading day. So again, welcome everybody. We'll get started here in 5 minutes, right at the top of the hour. Good morning, Miss Liz. I think you missed it though this morning. Yeah, that pattern we were working on yesterday really played out. I think we still have two more down drops coming. But after an impulse is a correction. So the coffee is strong this morning, but I was 3/4 of the way through my pre-market prep, going through the prep screens and everything and getting things set up. And then we saw the market start rocking. So but I was already short and caught it. So I'm in pretty good spirits because I was taking a little heat on it earlier, and but I got the whole down move on that. Yeah. Sometimes trading that early, the market moves a little slower. So, but I was really taking the heat on the position I took, and I'll explain a little bit of what I discovered here as well. I entered just before the breakdown on that. Uh, I'll show you. Actually, where I entered the S&P was right here, was just breaking a really small time frame support. And initially, I was just looking for a little breakthrough, and turned out to be a pretty big one. And let's get started. All right. Happy Friday, everybody. Good morning. Markets got rocked this morning. Um, I do want to, we've been talking throughout our sessions here um, about this website with news and such. The I went and upgraded to the elite package, and the news comes out real time on this. And I just want to point out the little bit lower. And another reason I was more on the bearish side of the market was there was an earlier report, again, a Trump tweet, and you get access to all of that. But oh, where was it? It was on Apple. There was some news that came out about Apple, um, that Trump was talking to them, and it was bearish news as far as. But I noticed that because of the time, tariffs on Apple. Okay, but the time that it was posted, okay, it took 24 minutes to get to mainstream media, and I was already short. So the dissemination of information is very important, and I haven't had this luxury of real-time news like this for several years since I had Bloomberg Terminal. And right now, Bloomberg terminals are pretty expensive, but this website has some pretty cool features in it once you upgrade, and they bill you quarterly. So um, right now we have no affiliation with this. I'm just mentioning that there was some information that came out that influenced the direction I was planning to make a trade this morning, and it turned out really well. I did turn on the timer for that because I wanted to see how long it took for the information that was live, real-time breaking news for the mainstream media to pick it up. And generally, it's about 30 to 45 minutes. You'll have the this type of news come out, and then it kind of trickles down and gets out to the mainstream stuff. And by the time it gets to the mainstream stuff, people are still trying to search and say, "What happened? What caused the move?" Okay. Well, check out this site. I mean, it paid for itself in one, within just a few hours with that. And also the other news that came out with the Trump Social is also breaking news, and you can get it faster than what you're going to see on X or Facebook or even Truth Social. You'll get it instantaneously as news. We did start off this morning as Inside Day, and that has changed quite a bit. Uh, Jumping out, the S&P does have some zones a little bit lower. Okay, we have an overnight zone, 57.49, 57. Okay. yeah, there's some unexpected volatility in the market, and that triggered TradeStation to increase their margin rates today. Another sign that the liquidity is going to be drying up on the futures because the day trade rates are not there, okay, for that particular broker. So make sure you're checking that. Also check the exchange and see if the uh, overnight margin rates have been adjusted. That's also a really good odds enhancer that the big players are also nervous about what's going on, okay? Uh, NASDAQ, we did jump into the trade, caught the first little bounce, but it looks like we're coming back, going deeper into that zone. And I'm just kind of holding on to that one. We had the Dow dropped right into a prep screen zone, and we're looking here on this small time frame for a little confirmation of a turn. Okay, we're not far away from it. We did feel the gap on the Dow. Okay, you can see that there was a nice gap. We got the prep screen zone just below the gap fill. We still have an unfilled opening gap down below. This whole move was a very light volume drop. I mean, there was just nobody there. Price just fell very quickly. Okay, so what we're going to look for and anticipate is that price is going to retrace back up some of that. And we can also see that from the prior bond auction drop, that big move that we had there, a nice pocket of points, we now have another pocket of points right here should price move back to the upside, okay? We did have that overnight support area that was being formed, and then, of course, price broke down. That'll be our first target for a bounce back up. But take a moment and look at these moves down, and a lot of times you'll see that if it's substantial news, you'll get about a 50% retracement off of that. Okay, so going from the origin of the move down, pretty much the Globex high to the Globex low, we're going to look for that opportunity about 50% back up for potential profit area. Okay, now that's just going to be a target. We have to be watching if it holds a low tight range and it starts basing down here, uh, right around the 23.6. There may be another move to the downside, but we definitely need to build another fresh accumulation of orders and possibly see where the sellers might be stepping in to hold that. Okay. Right now, it's just looking for potential reversal pattern. And we're going to be watching for that opportunity as it comes out of that prep screen zone. Okay. The exchange traded funds, I want to look at those real close. We are seeing that the exchange traded funds are gapping down quite significantly, and IWM also one of those that's gapping down. We can see where it's trading in the pre-market. Took out that first level we were waiting for. And you can see that there is on the exchange traded funds a demand zone area, also another gap fill in a buy territory. So we'll watch that area for a change or a bounce. As we are watching, we just looked at the Dow for a moment there. The diamonds are also gapping down and into that first zone around 413, 411. Okay. This is why I'm looking for a reversal pattern to be formed, but looks like the diamonds are going to need to come down just a little bit more around the market open, and then we'll look for the opportunity to go long. Now on this small time frame, we're kind of might break just a slight bit lower, okay, than where I have the zone. Let's just take a quick look at that. Let's see if there's anything over there to the left. Yeah, we do have an area that we can look into. Really small one right there. Okay, so if the Diamond Exchange Traded Fund takes out this, we're anticipating it to go a little bit lower. Let's anticipate that the opportunity to take a long out of that is just going to be right around that 41,196, 41,104. Okay, it's a pretty small zone, but realize the amount of risk you're taking. Okay, because you're looking at 92 points on the Dow. Okay, you can see that it looks small, but it's actually quite large. Okay, so we'll be looking for that long opportunity and then a bounce back up about 50% of this move down, right around in this range here. 41,196, 41,104. Okay. Ah, good point, Miss Chris. Thank you for pointing that out. Yes. Okay, S&P, yeah, that's one of the things that would come back. S&P, this is our starting our third day below the 200 moving average, probably going to have its sights on the 50 moving average there. If this level doesn't hold right here, there's another gap below it. Let's jump out to a little larger time frame so you can get a better idea of what that picture looks like. Okay. See, right now we're just on the edge. Okay. In this area, we might expect a bounce, not a change in trend. Okay. And we're filling that pocket of points that, and this is another light volume price move, and you can see how fast they fill these areas. Okay. Also, right below it, we have a large gap. Okay. And of course, unfilled opening gap that was down below. Price breaking below 57.33, we would then be targeting a long entry right around that 56.84. After this impulse move, we had a correction, and today we had another impulse. Okay. So, in anticipation of another correction move, okay, we have to anticipate that we're going to have more shorter term profits. Okay. Now, the shorter term profits are going to be pretty substantial because of the vibration of the price. Okay. Just don't get hooked in staying too long. After these impulse waves, you can check and go back history wise and see that after each impulse, okay, there was a correction. Okay. And in that correction phase, we have to adjust our expectations. Okay. And expectations as far as longevity of a trade. The conditions have changed, even though it's been pretty dramatic on the drop this morning and all the breaking news and stuff that's going on. We had a strong impulse, okay? And now we're going into that phase where we need to manage our expectations by taking profits, roughly about, I would say, 2-to-1 to 3-to-1 today because of the volatility, but smaller profit potentials. This is not the beginning of an uptrend, okay? And as we have this big drop, okay, an impulse wave, price either is going to come into a demand zone and turn, or it will need to create a fresh accumulation of orders. Okay. So let's start off with our expectations for the intraday trading. Okay. Is to set our sights on smaller profit potential and be very careful about how big the vibration is. Okay. Now, as some of the students have pointed out, that with certain brokers, the day trade margin rate has been eliminated today, okay, for some of those. Now that's going to eliminate a lot of traders from the market. I mean, they might drop down to the micros, but the micros are still expensive to a lot of traders with smaller accounts when we have this much volatility. Okay. Now, the only reason they adjust that is because they're afraid that they're going to be on the hook for uh, uh, the broker's afraid that it's going to be on the hook to cover any margin calls that cannot be met. Okay. And that generally happens when we see a big price move. Okay. Now, all right. We got a lot going on. Let me bring up over here. We did have a strong drop around that news. So the tweets that came out, I don't know if you call them tweets anymore, but the social media post, big move down on the 10-year and the 2-year. Now, this is going to make selling the US debt, it's going to make it even look worse. Okay. Nobody wants to buy it at these prices. They, getting back about 5% will probably get more people willing to buy the 10-year and the 2-year yield. Okay. But the significant drop, okay, and the dollar showing a lot of weakness is setting the stage for some big things about to happen. Okay. We did see the volatility index. Oh gosh, now it's up $5. Oof. Okay, so the fear had come into the market quite aggressively, and we're seeing a very big move up on the volatility index. Now the trend low, time to go, trend high, time to buy. So we'll be looking for demand zones. But as we have just stipulated, after a big price drop, we are going to look for kind of that trading range type trading. Okay. We do have the NYSE trend. It was very low in the pre-market, and now it's come back into consolidation. Okay. Now, if the big players are going to step in and save the market, we will see that the trend, $TRIN, which is a short-term traders index, will get above 2. Okay. Now, right now, the trend is in the middle range. Watch the trend, $TRIN. It's the short-term traders index for the NYSE. We need to see the trend going high, and then we'll expect about a 30 or 20 to 30-minute delay as price comes, as the stocks start to maneuver and the big players start to buy. At the same time, if the trend gets above 2, we want to see that the tick is showing more upticks. Okay. We want to see a strong buying coming in up around the 800 to 1,000 level. Okay. And then, of course, the VIX is high already in the pre-market. So we're just waiting to see if the stocks are going to follow through. Remember, as we watch the equity indexes, okay, as we watch the equity indexes, the stocks move first, exchange traded fund moves second, and then the futures adjust. Okay. Now, that happens during the regular trading hours. Okay. There's a lot we can learn from this today. Okay. So if it happens again, we're more prepared for it. Okay. So, no, I lost track. Again, the way that these adjust, okay, and what I wanted to go back now is look at the S&P futures are down 85 points right now, okay? And this is where we bring in fair value, okay? As we look at the Dow stocks that are greater than 94 cents or less than 94 cents will net the results, okay? So as we're looking in the pre-market right now, we have 21 Dow stocks that are negative over 94 cents, okay? And nothing up. So we take that when we're looking at the S&P, we take the number of Dow stocks that are 94 cents or greater negative, multiply that number by 2. Okay. So we got 21, multiply that by 2, we have 42. Okay. Cash equals 42. S&P futures are trading at negative 85, now 92. Okay, as we're getting closer to the open. S&P futures are now oversold by about 45 points relative to cash. Also note that the volume is not participating in selling off right here. Okay. The price dropped on the stocks to find the buyers. I appreciate the comment that Wes left in uh, Discord room for us, and he says, "Hey, can you touch on this subject during the live trading session?" He says, "In my opinion, supply zones are created by a knee-jerk reaction to the news." Okay, Wes, they're not created. That's when they're retested. The reaction of the news and the light volume, okay, the big price drops or the big price rallies, okay, are the algorithms adjusting price up to match orders. So these big volatility spikes in price are revealing, and if you look left, you'll find the picture, and that's what we always need to study. That's why we're looking left to find demand zones and supply zones, because the reaction in price reveals where the big banks and institutions have their hedge to offset risk. And um, the reaction is that's where the large stack of orders are going. So the algorithms kick in to process orders since there were very light volume in this area. And you can go back up and look. So you've got a lot of volume down here, but when you go back up into that area of that price drop, there's nobody there. That's why the big red candles and green candles happen. Nothing is there. Okay. I won't say nothing, but very few small orders. Price just gets blown through that. All the people stops. Price stops going down and starts to base when there is more buy tickets over sell tickets, and just the inverse shoots up. So I appreciate the question, but we look at supply and demand not being created by the reaction, but being tested. Okay. All right, let's come back out to S&P as prices resting. We'll still have some little more volatility, some margin calls, and people going a little crazy here at the open after the big drop. The FOMO will kick in. Okay, so we're going to look for the opportunity to go long. Okay, but we want to wait till the market opens at this point. Okay. NASDAQ, I'm already in. I caught that bottom there, 20,732, 20,687. Caught a little bounce on that, and I'm just holding on to it. We might still see some more volatility and potentially a second test of that area. Okay. So keep an eye on it. We're also seeing that the NASDAQ stocks, Apple, Broadcom, NVIDIA, Meta, Tesla, Amazon, Google, and Microsoft are all opening down, okay? Significantly, but on light volume, okay? That's why we check the volume in the pre-market, and as we get closer to the market open, the volume is still very light. And we also understood that the S&P futures, Dow futures, are oversold relative to the cash market. The cash market stocks, NASDAQ 100, Dow 30, S&P 500, dictate what the equity indexes will do. Okay? Futures follow, they do not lead. Okay? Now, the reaction of the futures is, hey, there was no orders. Okay. Now the stock's selling off in here on higher volume, I would be looking for the trade to continue going lower. Okay. But that's not the case. The stocks are looking for buyers and they've gapped down into the origin. Okay. And you start looking at where did they gap down to? Okay. And as you start looking at where the gap is, you want to say, well, is it gapping into demand or yeah, do we have an opportunity to go long just yet? Okay. And right now it appears that we are not gapping into a good demand zone. Okay. Maybe Alphabet is probably one of the stronger ones because it is back in that old resistance area. Okay. But the other ones still have a further to come down. There was some positive news on Microsoft as well that came out. Microsoft did make all-time highs this week. All right, so let's just double check on the equity indexes, and then we're going to go check a few other things. Expect some volatility around the open. Have your eyes set 57.49, 57.73. Okay, I want to be ready for that opportunity to catch kind of a little panic sell, and then we'll catch the reversal out of that. Off the daily chart, let's just open this up. Another reason for that level is that if we measure from the gap up to this pullback, we'll see where that 88.6% retracement's at. Bam. Okay, so we are expecting a bounce here. Okay, but it's not in a demand area where we can look for a strong buyer. So we're just looking for that bounce as we've talked about earlier. Okay, and we're just looking for the opportunity to get into that. Okay, that'll be a good one. NASDAQ. All right, going back up. Beautiful. Prep screen zone held. And we always want to exploit the prep screen zones. Okay, we also had the Dow come into the prep screen zone, and we need to look at on a small time frame. Yeah, we need a little more commitment on the small time frame to give us a solid entry. I'm going to look a little bit lower here, 41,196, 41,104. Russell overshot the zone, but has since recovered. Yeah, kind of wiped out a few of these areas. But we're also seeing that there's an accumulation of orders being built right now. And we have a pretty good chance that this is going to reverse, come back up. We see that the opposing zone or area, okay, we have a leg base, okay, right back up at top. As the market starts to open on this Russell, identify the speed bump right here, okay? We did fill the unfilled opening gap, okay? And be very cautious with this type of chart formation. Now, we do have the low pivot point in the middle. We have two touches on the left and two touches on the right. In our Mastering the Charts course, we talk about this, okay? Now, this particular pattern is common with a drop base drop, okay? Now, when we have two touches on the left, two touches on the right, it is a pretty good accumulation, okay? With the speed bump just on the other side of it, we may see a little pop up and then price go down to find some more buyers. Now, remember, the liquidity is going to be a little lighter today at the open because of the margin restrictions on a lot of these day trading brokers. Okay. Margin restrictions take out a lot of players. Okay. So many of us use margin every day in our trading and use the margin for these leveraged instruments. Okay. All right. Yeah, I text my friend Nevin this morning. I'm not sure if Nevin's in with us, but I said, hey, watch that area 20,732, 20,687. And he gave me a thumbs up. I'm hoping he's participating in this because it's going to be it's turning out to be a nice trade. And we just have a couple of micros on this. Okay. All right. Let's see. Crude oil. With the news that came out, we did see a pretty some volatility in that. Right now, the open range breakout, we're looking more for the bull trap and the bear trap at this point. We're just right on the edge of a wide Globex zone. I also want to point out that the spread between the pit and the 5 p.m. close is a little wider. Okay. We don't often see them that wide. So as we are documenting and studying the pit close versus the 5 p.m. close, we often see that price retraces back up into that range. Okay. And then we can look for a potential trade entry for the change in direction. Okay. Nat gas got really volatile, and recently nat gas has been moving opposite of the crude oil. Okay, so nat gas got pretty volatile this morning with the information out there as well. I think nat gas is one of those things that will have tariffs on it, so a positive reaction. Gold shot right up into a supply zone. Okay. But we've now started a new uptrend. Notice we have higher lows, higher highs. Okay. So taking short trades against the trend is a little more elevated risk. But using the leg base group of candles going against the trend, we can often look for a small retracement out of there. And most often we can catch a little one-to-one counter trend trade. Okay. So as much as price hitting a supply zone or where we have leftover unfilled sell orders, okay, or people that bought here, they're just trying to get out of break even at the moment. Okay. Going against the trend, we have to know that it is elevated risk. All right, markets are open. Let's see. Okay, dollar is still showing some weakness. So Canadian dollar pushing up to supply with the US dollar showing weakness. Crude oil bouncing off of support, larger time frame. Copper potential breakout. Why do I have two coppers on there? One of those should be platinum. Platinum's getting very close to the supply zone. It came really close to getting into that range today. So we'll watch that 1108, 1120. All right, NASDAQ doing good. And let's see, S&P. I'm going to wait just a little bit longer. Holy smokes, that was an awesome move in price, but I didn't have a place to get into it. Wow. Okay. Now, with this particular price structure, okay, the breakout trade was elevated risk, and you got to look for that little speed bump on the other side of it. Okay. This sweeping move up is something that you should also keep an eye on because it's basically just running stops. Okay. Anybody that was short, okay, and people are trying to jump on this, but that particular price pattern, the way it's just consecutively moving back up, is a result of not many players are in this area. It's almost like a gap. Okay. Dow, okay, back into the pocket of points. Now we're not expecting that to fill today. All the equity indexes gapped outside the prior session's range, so we're actually looking for a gap and go, that's one of the things we look for, okay? Outside day, gap, a beautiful bounce off of the prep screen zone. Holy moly. We'd be doing the happy dance on that one, okay? All right, what do you think, Harvey? Is that a good one? Yeah, I'm hitting my feel good button here and I'm not gonna push it. Yeah, it's running the stops. Keep in mind, just above this area, we do have the pocket of points. Another thing that I'll point out real quick is that look at the volume here. This is going to be crazy whipsaw type stuff. Okay. Your low single digit numbers. There's no banks or institutions trading that. Okay. And once it starts to clear that 20,935, you also notice that there's a light volume. There's nothing in the way. Okay. Let's see. Are the stocks selling off? Okay. Well, it looks like the stocks are bouncing. Okay. So just as, going back to what Wes asked me to reference this morning, okay, the reaction down here where price dropped to is not a new demand zone. It's a retest of one, retesting of one that's over on the left-hand side. Okay. All right. I'm about ready to hop out of this. I'm going to, it's pretty volatile, but it might get a little bit more move to the upside. I'm going to place a trailing stop on this one now. Cancel. Because I just want out. Okay. So I got a trailing stop on it. It'll probably take me out pretty quickly with the way that this one is moving. And then we'll look for the entry if price comes back and finds any leftover buyers. Okay. No, I'm taking the whole thing. I want to be doing the happy dance all day Friday. I mean, ask yourself the question right now, when you're looking at the way the price is moving up, are you ready to go long in this right now? You might say, no. Yeah. So, and once the volume dries up, we're going to have a pretty quick snapback. Okay. So as we are watching this now, I'm trying to stay in as long as I can, but
Order filled.
Yep. I did take half off. Let's get that other trailing stop in there. Okay. So I'm down to 2 micros now. All right. Yeah. See how fast it starts to drop? Okay. Because now it's swept out all the short traders. Okay. Profit taking of such. And now we're looking to see if there's going to be any sustainable buyers back down at the low point. Okay. Remember, these markets just rocked a lot of people's world. Let's come back out to the exchange traded funds. SPY did come into a reverse leg base, and we use that reverse leg base when we have price coming into a gap area. Okay. The Qs is still a little bit further down, and the Qs missed our demand zone or our little leg base zone down here. Actually, on a higher time frame, you can see that it is pretty wide. Right there. Okay. IWM still needs to come down a little bit further to find the buyers for that. Dow bounced right off of that. Okay. Now remember, exchange traded funds move before the futures, and if you want some support from your index futures trades, you'll look for the strength on the exchange traded funds. Okay. All right, getting a pretty substantial pullback. Alphabet, just need to. Okay, so now's our time to go back and reference what are the big banks and institutions doing right now. So let's come back out to the internals. Sell program, okay, more downticks than upticks on the NYSE, so people are getting out. I didn't catch, let's see. Oh, there we go. The market open order, or the market open order imbalance. We had S&P selling off. Look, it was very little sell off as far as the number of shares being sold off. And then we had the Mag 7 actually showing some buying down here. Okay. Prices for platinum, palladium rise significantly. Dollar struck lower. Trump hits 50%. Okay. So yeah, a lot of the drama is just now being unfolded. People are trying to figure out what they're going to do for the trade day. Okay. We're already ahead of them. We're just now waiting for where we might have that opportunity to enter a trade. Nice counter trend. We did achieve a 1-to-1. Okay. I'm not bearish on gold and I'm not looking to take it short. It was just a counter trend trade. Okay. And from our prep screen, yeah, we did see the Dow came back into a zone, NASDAQ, Russell, but the S&P went in, has not made it to the area. Okay. After an impulse wave, we're going to look for the correction. Okay. So now we're going into kind of short-term trading range so we can manage risk, but we're also going to look for a small profit. Okay. Yeah, a lot of folks are going to be saying, yeah, we're going to get that gap fill, but the odds are very small about getting a gap fill when price gaps outside the prior session's range. Okay. A lot of these stocks, watching a small time frame, and we can take this from a lesson that we had yesterday in our community room, is if price does not drop into a demand zone or go into a supply zone, then it has to build a fresh accumulation of orders. Okay. And that's what was happening yesterday off of the S&P. The S&P had a low at the Globex low yesterday, okay, was not in a buy territory. Okay. It was not in a demand area. So what happened throughout the day was that fresh accumulation of orders. And as we kept looking for where the sellers were pushing price down, buyers pushing price up, we built that fresh accumulation of orders. Okay. So if we have price dropping and it does not hit a demand, we have to be patient and wait for that fresh accumulation of orders to be created. Okay. All right. So that zone had been used. All right. So on the NQ, okay. And right now we do have a small resistance. It's a small time frame. Again, we're going into that correction pattern. So next opportunity we're looking for, we'll be back down here, 20,072. We're going to look for a retest of this zone. Okay. And let's bring the S&P. Okay. The stocks are not ripping back to the upside. Okay. Without the stocks, we're not going to have a good move back up. Okay. So as you can see, it's going to take a little bit of time right down here to build a fresh accumulation of order, to even build a reversal pattern. I mean, we just got a low pivot point, okay? And this is on the exchange traded fund, the SPY. Just tracking whether we're in an uptrend or a downtrend. See, we made a higher high before we made a lower low. We did take out many of these pivot lows, but as far as catching a move back up, we need to make higher low, higher high to see that the trend has changed. So be patient with yourself on this. Getting in because of the excitement and the emotions is not a good exercise. Okay. Look, the banks and institutions are going to come back in. They're going to show us where they're buying and show us where they're selling. We can see by looking at the volume on the market depth or the depth of market what we have right here, that the volume is very low at each price point. Okay. So the banks and institutions are not buying this up. More evidence of that is we're seeing the trend is not there. We're not seeing any upticks overtaking downticks yet. We're still below the zero line on the tick. Okay. The action you saw this morning is just what do we call it? For lack of a better term, we call it a dead cat bounce. Okay. And that is a technical term, but I don't want to wish anything bad on animals. I like cats. I like dogs. I'm just referring to a terminology there. All right. All right. Canadian dollar is approaching. Let's go out and look at that one. Canadian dollar. Now, the US dollar is in kind of a tough spot. Okay. So as we look at the Canadian dollar looking for an opportunity to sell in a supply zone, we need to see that the US dollar is in a place where we can expect a move up from a demand zone. Okay. I'm going out to a little larger time frame, and right now you can see that the US dollar came down and is bouncing off of support on a higher time frame. Okay. That bounce off of that support on the higher time frame may give us what we need for the opportunity to take a short trade. Okay. So I got 90-minute. Let's just do apples to apples here. Okay. So right now the dollar is kind of quiet, and the inverse relationship that Canadian dollar and US dollar have is that we would need to see this US dollar start to move up at the same time the Canadian dollar is getting ready to hit. Okay. So let's bring that up. I'll be monitoring the US dollar. Let's see, I have a smaller time frame, leg base, but on this large time frame, there's one as well. So we got two zones, one inside of another. Okay, we're just about ready to hit it. We are trading the June contract, so CDM 25. Okay. Yeah, we're looking right in the middle. I'm about ready to hit the button on the Canadian dollar. Okay. US dollar is getting a smaller uptick. Come on, do it. I gotta move on. All right, I'm gonna take one. Let's come up here. 650 area. Oh, we're right there, just a couple of ticks away. Okay, I'm gonna sell one contract at the market. Looks like we're about tick two away.
Order filled.
Okay. And I'm gonna place my protective stop loss right about 72,751. So let's come in at 8. I'm gonna go to the upper zone till this gets going. So I have about $200 risk on the trade at this point. Stop loss is at the extreme. Okay. As we look for things to change. Dollar's starting to show a little green candle. Okay. In the queue, we're waiting on. Come on back down for us. S&P waiting. Don't feel like you're going to miss out. Okay. These are tough markets to jump into. Okay. If you didn't get in at the bottom and you're not in profit, the risk is pretty great right now to stay with to just jump in. Okay. I've learned that lesson the hard way. Okay. There is a demand zone down below where we do have economic reports coming out. With 10 a.m., we have new home sales. And then at 12 p.m., we have Lisa Cook, Fed chairman, speaking. Okay. How we doing on the Russell? Oh, Russell's going to give us a good entry here. Russell's built that base. Okay. And we are looking for demand zone or looking for price to come back. I will look at an opportunity. I need to see the market conditions when we start to break that level. Okay. How are we doing on the Dow? Nice move on the Dow. See, generally when price comes up into that pocket of points, it has a grind right through it. Okay. If it gets about halfway in there, then we might be looking for price to come back down to demand. Okay. Wow, Dow went down and tested that low was right off the 50-day moving average. We do have another prep screen zone, an older one, and an unfilled opening gap, 41,192, 41,116. Price took that whole zone. Hey, a great exit on the NQ. What do you think? The stocks are not supporting an uptrend yet. We'll be waiting down here. Okay, Canadian dollar went into that zone. Now, if you want a more conservative, you can take it as a confirmation as price leaves that area, but continue to monitor US dollar. Okay. Now it's going to get tough for a lot of traders. They're going to start over trading. Market has been quieting down quite substantially. And just after the open on the equity indexes, okay. So what we need to see is many of the stocks did not drop into a qualified demand zone. Okay, as we come back out and look at the all the stocks, I mean, Google did come back to old resistance, but it hasn't come into a demand zone yet. Okay, you look at Amazon, price came into the gap area. We're looking at Meta, came into a gap area. See, when the stocks are not at a demand area, they too must create a fresh accumulation of orders to start the move back up. Okay. Now, we have to understand that markets are going to react to where there's hedges and different things at price, so a stack of orders to offset risk and so on. Okay. But if that reaction in price drops down or rallies up and there's no supply or no demand down there, okay, that it's reacting off of, okay, then it must form that fresh accumulation of orders in order to make or continue a trend. Okay. So we're seeing that right now. This is why I'm anticipating, take the profits quickly. We're in a correction phase after an impulse. Okay. We either are going to build that fresh accumulation of orders or price is going to continue lower till it finds one. Okay. Okay. So we do have we have an economic report coming out. It's not necessarily a big market moving economic report. We also have the 10 o'clock reversal. 85% of the time, the market changes direction at 10 o'clock. Stocks are getting a slight bounce, but we have not made higher low yet. We haven't made a higher low on the SPY. Okay. We haven't even confirmed the low point yet. Okay. Oh, something must, yeah, well, it's not out yet, but I'm noticing a spike up on the 2-year and the 10-year. Okay. We're starting to see the dollar rise, which is going to help our Canadian dollar trade that we took. Okay. There's so much information outside the price chart that helps us with our decision-making process. Okay. Our course to pre-market routine demonstrates over and over again the things that we look at correlate to help us make those trade choices as well. All right, showing a little green on the Canadian dollar. Okay. Now, our demand zone is still much further down. Okay, I don't expect price to go down to that range. We hit a supply zone. Stepping out to the higher time frame, let's just reference the daily chart real quick. Okay. Smaller time frames, we did have a supply, and the larger time frame is still in a large time frame downtrend. Okay. The reason I wanted to check this is because I wanted to find out if I was taking a counter trend trade, or we're actually going along with the trend. Okay, so the daily trend is still to the downside. We found a smaller supply zone, small time frame, splice into the larger time frame trend. Okay, that greatly reduced the amount of risk on the trade. Okay. Now, to support this trade to continue going lower, we need to monitor the US dollar to trade inverse. Okay, so this is for an intraday trade. Okay. We did have a fresh accumulation of orders being built down here. We see the sellers push price down several times while the buyers were pushing price up. Okay. A qualified demand zone is going to be located inside that buy territory. Okay. Remember, observe the number of contracts on your depth of market. Okay. When you're in the low single digit numbers, you're going to see a lot of that price volatility. Okay. And to get a good reference, even though the candles look small right now, go out and add the ATR on there. Okay. Right now, the average candles range for the last 14 candles is almost 33 points. Okay. But the candles look so small. Yes. Okay. They do. But you have to be prepared that the dollar amount is going to be quite substantial when you see in each of that, that small range right there is actually 33 point swings. Okay. So if you've been stopped out more than once or twice this morning because the P&L was too big, make sure you reference the ATR to see how much you would have to risk on that just to stay with the trade. Okay. It may not be information you want to hear, okay, because everybody wants to trade after an early morning session like this. Okay. I want to make another trade. But what I'm trying to do is exercise some really good risk management. Thank you, Miss Chris. Miss Chris says, the CL price was attracted to the prior session's close, the pit close, and the unfilled gap. We got that. Nice job. All right, so let's look up into the left. Let's see if we have any opposing supply zone. Now, the Globex range was just on the wide side, so the bull trap and the bear trap are also in something to watch for, okay? And I'm still referencing a 5-minute chart. And as we work our way in, here's the another gap area where we have the 5 p.m. close and the pit close. We also have a leg base at the origin of a strong drop, okay? I'm going to identify that range for that potential bull trap, okay? And to build on that, we want to make sure that zone is in the right spot based on our process of identifying a support where the buyers were pushing price up and our sell territory. So I want to make sure that my zone is located within a sell territory, okay? So we'll reference at 61.54, 61.75 as potential of leftover orders, okay? Yeah, it looks like a lot of the headlines are still scrambling to find out what's going on and trying to create that narrative. Now, for the most part, I'm pretty bullish on crude oil due to the location of price compared to the 50 and the 200 simple moving average. The daily chart is showing a strong resistance as price has been building the base. There are some meetings, I think, with OPEC, and there are some reports about the that have been making themselves known as well. Let's just do this. Come out and we look at commodities, energy secretary. Yeah, if something starts coming out good with Iran, then we may see a strong drop if sanctions, once they start talking about sanctions being possible lifted, we'll see a strong drop on crude oil, okay? Because that'll increase the supply quite substantially. But we'll do some more research on that a little bit later. For a counter trend trade, okay, and with that potential trade entry 61.54, let's set that up. Now I'm only going to be looking for like a 1-to-1 price move down. We're also seeing heating oil coming right back up to resistance area. Okay. So it may just be a small pullback. Okay. Thank you. Let's go back over to that range. I want to find an area of price inside that there. And what Chris just pointed out is that there's a pit close at 61.59. Okay. So I'm going to use that old pit close as a reference because we did see as price came back up to the pit close today that we got a nice little pullback. Wasn't enough to change the trend, but enough for a small profit there. And we can see that going back in history and just looking at how price reacts around the pit and 5 p.m. close from the prior sessions. Okay, so I'm going to look inside that zone 61.58, starting off with a couple of micros. Now, I usually size my position pretty small. When I'm potentially taking a trade against the trend, okay? Because we have on this 5-minute chart, we made a higher low and of course now taking out 2 higher highs, okay? So you all have your own rules around how you will participate or how you will take trades. Okay. Uh, and size your position based on your trading plan. Okay. Looks like we're taking the heat on the Canadian dollar. Oh, yeah, going to take a little more heat. I just referenced over the US dollar and it's popped down. Okay. So, yeah, that's why we're seeing that spike up on the Canadian dollar. Okay. Right, we're making we've got 2 points, but that's not quite a resistance. We need 3. Right. Boy, everything just died down dramatically, didn't it? Well, it looks like a cup and handle if we were in an uptrend. Bank index is rolling back over. Nvidia and Apple are they haven't committed to an uptrend yet.
Order filled.
Exchange traded fund. Oh, we just got hit on crude oil. Now, heating oil is still pushing up into that supply. And give this a little extra wiggle room. All right. Let's see, S&P. Yeah, there's candlestick, there's on some platforms, one that like the one I'm using right now, the intraday margin rates have been restricted. So it's 100% margin right now. Okay, or not. You got to put up the full margin amount. Okay. So there's no day trade rates on the platform or with the broker that I'm using right now. Okay. Now, if you can imagine how many traders are affected by the day trade margin rates being restricted, okay, it's going to cause the number of contracts at each price point to be much smaller. So the liquidity is much less right now because of those restrictions on the day trade margin rate. Okay. So the, sometimes you know, I agree with the statement that Monday's a holiday, people are not trading today and long weekend. I get all of that. Okay. And that does make sense. But also we have to include that, hey, the day trade margin rate is been taken away from many of these traders. Okay. So since they can't trade 10, they might be able to trade 2. Okay. And that's why we're seeing that volatility. Okay. So just be aware that there are some additional things that go along with, yeah, we got a holiday, the lighter volume, people may not be trading because they're on vacation and things like that. So a lot of whipsaw because of that lighter volatility. Okay, we're starting to go into that little pocket of points. And we're seeing the stocks have dramatically quieted down. They're not trying to fill the gap at this point. Okay. So if the stocks are not moving up aggressively, okay, then the futures are not going to fulfill that. Okay. All right, let's draw a couple of our pivot points. The Qs have made a higher low and a higher high. Okay. And just like the Qs, okay, in order to continue this uptrend, we're going to need another pullback to make a higher low to splice into this. Okay. Now, this area that we're looking at, this resistance area, price has closed above it. Okay. That's that first candle that has closed above it. Okay. And one of the things that Liz has shared with us in our community room and other places here is, when you have that area, and you still anticipate price to continue up, is waiting for price to close above a resistance area where you've had some accumulation. Okay. So as we have that resistance level established, okay, small, okay, price did close above that resistance and that accumulation. Now, if you're going to splice into and you anticipate the move to continue, you need to have your rules clearly set on how you will enter a trade for this. Okay. Now, I'm just still going to focus on my leg base group of candles, and I'm going to put the little dots on there to look for that leg base. Okay. I don't see any until price gets back down to this level. But I want to adjust the time frame and look right in here. So I'm going to drop it down a couple of ticks. Yeah, 1499. What am I saying? Hi, Greg. What did I miss, Liz? Or Chris? Oh, Nevin says, the day trade rates are still good on NinjaTrader. Okay. Good morning, Nevin. Glad you could visit us, hang out. All right, so I'm just adjusting 1 4. Yeah, watch the stocks. The stocks are still showing a little weakness. All these stocks dropped into an area where there was no demand zone. Okay, so a fresh accumulation of orders has to be built. Therefore, we need a resistance level, and you need the you're going to see that prices are going to be chopping around in there. Yes, for that initial bounce. Thanks, Greg. Whoop. For that initial bounce back up, let's just come back out there. We're not expecting the gap fill, but if you pull Fibonacci measurement from the Globex high to the Globex low, look for that dead cat bounce. As a good bounce would be up to about 50%. Okay, a 50% retracement back up. Is that what we just hit? I'm waiting for my Fibonacci lines to come up. Wow, exactly. Beautiful. Yeah, when price gaps outside the prior session's range, not often do we see a gap fill. Okay. If we're gapping up or down inside is the highest probability of the gap fill. And if we have broken the range in the overnight trading, but open inside, that is kind of the second level where we're looking for a gap fill. But price gapping outside the prior session's range, often the gap doesn't fill the same day. And on some of the larger time frame charts, that's exactly what happened when we have the unfilled opening gaps. And price do come back to those levels. And we did fill one today on the NASDAQ and the S&P, the Dow and the Russell. Okay. Okay, so we're forming a support area. Now Russell got a nice bounce off of that. It did overshoot our prep screen zone, but it's getting a pretty big reaction back above that. Dow, we're waiting for the pullback. Yeah, we're waiting for our next entry on the Dow back down about 41,196, 41,104 currently, because we don't have a new demand zone at this point. Okay. All right, I do have a leg base. No, I don't, not yet. Let's go back. Let's change that tick chart. Want to find a way to splice into this. If it's going to continue up, we'll find a way to splice into it. Okay. Oh, there it is. Okay. So finding that leg base, as the NASDAQ, as the Qs start making a potential uptrend. Okay. We have higher lows, higher highs as prices building up. we still have to have a place in mind where we're going to look to apply a trade, okay? And let's see, that way. Yeah, that entry worked out pretty good, Liz. Did you get it? Okay. Okay, so the NQ is continuing to run. I'll look for an opportunity around that 20,892, 20,847. Yeah, you're doing one-handed trading. I get it. Yeah, I bet you're doing a lot with your options trading today. Making adjustments. All right, so when price starts getting into these areas where we had a light volume price drop, okay, it's like a gap, okay, and price could move through there pretty easily, okay. Now there's jumping in now because you think the market's going to be moving up, okay. We need help from the stocks, and right now the stocks are moving into that gap area, okay. We also see that we've made a first higher low off of the Qs. Okay, so things are looking like there's strength to the upside, but on the outside of this, the studies that we have taken, it is very low probability that the gap will fill today. Okay, so let's put that, and as we're looking at a tick chart or a small time frame, let's understand where that gap fill is at. Okay, and this is the 5 p.m. close. And that's where the potential gap fill is at. Okay. Now, I'm going to look for an opportunity down in this range. Now, understand the volume is extremely light right here, low single digit numbers. So who are you trading with? You're trading with novice traders. Okay. You're not trading with banks and institutions at this moment. Okay. Banks and institutions showed their hand down here where the market stopped going down. Okay. And then reversed and went back up. So as we discussed earlier, let's go out and look at the, oh, I don't want that one. I want the average true range. 28, let's call it 29 points. Okay. So the ATR right now, 29 points. What that means is that of the last 14 candles that you're looking at in the chart, okay, the range has been 28 points. So if you're trading one micro or trading one mini versus a micro, kind of imagine that volatility you're going to have in that price swing. Now you're either going to have 28 times 20 or 28 times 2, okay, to see that volatility move, okay? So be prepared. The candles do look small on the chart, but the risk management needs to be acknowledged here, okay, that today, a day like today, the vibration is pretty big, okay? Even trading one micro can be pretty, or be much more risk, okay? You're going to see the Liz. All right. Okay, SPY is limping off the low. And we're waiting for the S&P back down a little bit lower. Ooh. I forgot to put my stop in on that. Yeah, we just hit resistance on heating oil, so I'm gonna put my buy stop right at the high of the session here. Started off with 2 micros, okay, going into that area. And what we're going to look for, if you want a more conservative entry, you can take it as it's leaving the zone, okay? Nice trade. Did you take the open range breakout on that one, you and Callie? Nice. Yeah, gas, contract rollover on that gas, okay? Last trade date is next Wednesday, okay? So on Monday, you'll see that we're trading the N as in Nancy contract, which will be the July. Now we're just in holding mode. Oh, so far I haven't been stopped out on Canadian dollar. US dollar is still chopping. The yields have recovered their drop. So the 10 and the 2-year yield drop is probably more of that yen carry trade being processed. Okay. Corn coming back down. Copper just went up and hit supply. What about our platinum? Platinum's doing pretty good. Copper. Hmm. Okay, copper just broke out. Now we have a fresh accumulation of buyers down below. Price broke out and is going into a speed bump. So at this point, we would start to anticipate price coming back down into the demand zone to find that leg base group of candle. Okay. All right, so I want to take a quick look at gold. Gold is still fluctuating around. And let's see. Ten points. I don't want points. Let's get the decimal in the right place. 0.00. Okay. I just went with 20 ticks, okay? And it's about $10 a tick on this for the copper futures, okay? What I'm going to do is price is going into that that zone where I'm going to expect a counter trend pullback, is I'm going to place a trailing sell stop going into that. Okay. And then once price is filled, I'll flip it around and I'll do well, I probably want to do a little bit more than that, but yeah, I'll do a 40 point or 40 tick trailing buy stop if I'm filled. Okay.
Order filled.
Trailing buy stop. That is really tight. There we go. Struggling. Still don't have a way to get into it yet. I took my profits early. Okay. I didn't want to sit through the ups and downs, and we had a pretty decent trade on that. But we're seeing that the move is continuing. You got a lake base up there.
Order filled.
Oh, always a little sketchy on the. Oh, time check. Sorry, I'm just going on with the trading day. We have reached the end of our live trading room. I would like to invite everybody, I'll be over in our Discord room. Okay. Would like to invite you over there. What I'm going to be doing is I'm going to come down to our active income channel. We'll be doing a voice channel in there and we'll just hang out. We'll see what other trades we have going today, kind of our community room there. But I do need to wrap up our live trading room and our live stream right now. So I wish everybody a good, happy Friday. Play it safe, be willing to wait. Okay. Get a good little entry and we'll see you guys next week. Okay. Remember, Monday is a holiday and uh, I will be off next week. Okay. So taking a little bit of a break. So the community room will be open for everybody to hang out in that. Okay. Have a wonderful weekend, everybody. Enjoy the Memorial Day weekend, a long weekend, and I'll see you over in the Discord room. Okay?